We've got a really optimistic outlook for the full year. And in a few hours, we'll talk about our confidence in the next 5 years. And sitting here today, I'm very excited about where Target sits as we think about the next 5 years and how we build on the momentum that we built in our business.
That was Target CEO Brian Cornell, who was with us in the last hour. Holiday quarter earnings and revenue beat the street's expectations, but Target did warn that it is expecting a meaningful drop in first quarter earnings compared to the year-ago period as it deals with what it calls ongoing consumer uncertainty. That stock right now down by about 50 cents. It's been up by over 5%. It's been down by a couple of percent, bouncing around this morning. But joining us right now with more on Target's report and the outlook is Michael Lasser. He is UBS retail analyst. And Michael, I know you were pretty bullish on the stock heading into this. What do you think after what Brian Cornell said this morning?
We're still bullish, Becky, and there's three takeaways from this quarter. Number one, during the fourth quarter, the company saw some increasing strength in certain discretionary categories, areas like toys, apparel.
Yeah.
Exactly. That shows that as those areas recover, Target's going to be a prime beneficiary. Second, its profitability improved meaningfully versus what was expected in the fourth quarter, and that should set it on a good footing into next year. It also set guidance for the 2005 calendar year that we think is very reasonable. It basically said, look, we're going to do what we did in 2024 from a sales perspective, and our profitability is going to improve. There's a lot of uncertainty in the consumer environment right now. So the fact that Target set reasonable expectations means the stock should set up well for this year and beyond.
Let's talk about those uncertainties, though. Cornell laid it out for us this morning. It's questions about the tariffs. It's questions about how the consumer is feeling, whether they are going to come back in and be willing to spend again. And he even said that consumers could see higher prices as soon as this week, in the next several days, if these tariffs do indeed go into effect on things like produce, because right now, this time of year, we're so reliant on produce coming from Mexico.
Yeah, the consumer does not love uncertainty, and that is translating to more volatile trends. Target also mentioned that February was a more difficult month. We're hearing that across the board. There was some adverse weather in the last few weeks, but our belief is it was not just the weather, that as all of these headlines continue to come out, that is having an influence on the consumer psyche and their willingness to spend. Now, if it is difficult for Target, it's going to be more difficult for a lot of other retailers. And in that case, Target stands to benefit from store closures and the consolidation of retail.
Target hasn't benefited from anything in years.
Yeah.
You've been bullish? You've been long the whole time?
We've been bullish for the last few years.
I mean, it was $250 in 2022. We've had a strong consumer and a good economy for the last 3 years, and we hit a new low today in Target at 119. So what's the problem?
So there's a couple things. One, the consumer has been gravitating to consumable items over discretionary items. What drives a consumer to go to Target is something new, something interesting, and something discretionary. What drives someone to go to Walmart is a stock-up trip. So that is giving you a flavor for what is happening.
They could have gotten into that business.
Target's in that business, not in as meaningful a way as Walmart. But
it's a lower margin business.
Right.
What else?
It's a lower margin
what
business.
else?
Shrink has been a meaningful problem. That's probably cost it more than 100 basis points of operating margin over the last few years. So it has not been an easy environment for retail. If you look back,
you tell your clients just to hang on. I mean, where did you? What's your in up at 180 and it's now 119?
Joe, our advice to investors is this is a stock you are going to want to own for at least the next 12 months and beyond.
Is that reliant on a strong consumer? Because if other retailers benefit more when the consumer's under pressure and doesn't have discretionary funds, I mean, you're assuming that it's going to be a strong consumer for the next 12 months, too?
We're assuming if it's not a strong consumer for the next 12 months, that is going to be more difficult for other retailers. And if you look at what's happened just in the last 8 weeks, Party City has gone out of business. Joann's has gone out of business. We're going to have to find a new place to go get our crochet needles and our yarn. Target's going to be a prime beneficiary of that. Those are going to accrue over time, especially as those categories come back in focus. We are not going to be in this malaise of the consumer indefinitely. It will get better, and as it does get better, Target stock
There's
is
a
going to
5-year
rally.
chart, Michael. That's a mess right there, right?
There's been some challenges, without a doubt. And if we want to get critical of Target, there's two things. One, it needs to make some more investments in its business in areas like supply chain, logistics, technology.
And now it has tariffs.
And tariffs are going to be a challenge across retail sector, and the most likely case is that tariffs are simply going to be inflationary, and that some retailers are going to be better positioned to handle that than others.